All right, let's get the microphone check out of the way here today. Let me know if you can hear me in the various streams that are going on, including the two public streams that are going on, and that would be on Twitch and YouTube. If you are on Twitch, I do suggest you head over to YouTube because that is where we are watching the chat. At the end of today's stream, we will do just a few, not a lot, but just a few alts. If there are some requests, go ahead and put them in the chat now, and I'll call for requests here in a little bit as well. All right, so let me know if you can hear me in the chats, and we should get rolling here in a little less than a minute. I can hear it on my monitor, yeah. Cool, thank you. Yeah, I've got speaker monitor right here. Cool, all right, let's go ahead and get the music under control. Yep. And we're going to roll right into Market Madness. Let me just get this. There we go. Paused over here for me. All right, let's roll right on into it. Hello and welcome to Market Madness Technical Analysis Wednesdays here on Landy's Crypto Corner. Today is December 6th, 2023, and we're going to start off, as always, by looking at Bitcoin. We're going to look at the spot chart today. We're going to review where we left off in the Bitcoin in 60 seconds video from yesterday, and that is, well, basically kind of where Bitcoin is right now. We can see that Bitcoin did hit the, oh, that's a yellow, excuse me, as I'm just having all kinds of problems here. Hold on a moment. All right, so Bitcoin has hit $45,000, just shy of the monthly target here at 45.5. Now, I had mentioned in the Bitcoin in 60 seconds video that the upper second standard deviation is kind of governing the downside areas that I'd like to see hold up. And in this case, that is at the weekly at around 300, to the weekly just below at around 41.8 to 42K. Now, if Bitcoin does lose the upper second on a close, this is the main area of interest that I'm going to be looking at around that 43.2 to 41.8. Below there, I would start to look to where the upper first is, and that's currently coming in at 40,800 or so. This is likely going to be somewhere around $41,000, so I would pay attention to that, because if the upper first is lost at any point, I would start to, and it's below, I should say, there is a qualifier there. If the upper first is lost and it is below the weekly here at 41.8, and then the upper first is lost, then I would start to target this weekly back at 39,000 to the monthly here at 38.5. where the basis band is currently coming in. That's likely going to move up to the weekly, maybe slightly above after close today. Now, if that doesn't hold up on any kind of pullbacks, if Bitcoin is to pull back and lose this weekly here, and then of course come down and test this weekly monthly area, then I would start targeting the weekly here at 37.7, which is right where I had mentioned, you know, if Bitcoin can start closing above there, and especially close on a weekly basis, we would come and test that 38.5 to 39K, which had already been tested, to be fair, almost 3 times there at the monthly. And then, of course, above that 39 to 40K, I was looking for a move up to these weeklies at 41.8 to around this well, it was not on the chart. It was technically above 41.8 to 42K, and then we're looking to the monthly at 45.5. But there was a short-term time frame area of interest here at this weekly at 43.2. Now above there, of course, we're looking to the monthly at 45.5. We did almost get there, and then if it does get there and get above, then we can start targeting the next monthly at 47K. Above there, the monthly swing high from the start of the bear market, that lower high on the monthly there at 48.240 to around 48.5 or so. Maybe more if it does head up there. We're seeing this rally. Just I had mentioned this prior in a prior stream, but this is a parabola structure, so I wouldn't be fading this until we see at minimum a high put in, and then I would still be very, very careful on the short side of things. There is shorter term time frame degen pullback trades, but nothing right now that I believe deserves putting on any risk, to be quite honest. I've been kind of staying out of the way of most of the pullbacks until I see something change structurally. And so far, when looking at something like even the lower term time frame consolidations here on like the 15-minute, there's some trades here. There was some trades here from that 42 and a half or so down to the 41 300 area. Those were good trades back here. Up here, there's been a few, but by the time you actually get any kind of confirmation of a signal, you're splitting hairs. You're still within a pretty tight range. I don't think it's worth the risk. And you can see that this is just, it's just an uptrend on the 4-hour here. So there's nothing telling me that that this is ready even for some of the lower term time frame trades to the downside right now. It's just kind of going sideways, much more likely to get chopped out while waiting for your targets to get hit, unless you are on the charts right there all day or something like that. Now when looking at this daily, it's pretty extended, but it's still got some more juice. That is denoted by BBWP. This is our RSI here. We can see that this is, when this does put in a high, we are likely to see, 3 bear divs here. This high back here is not called a high. It is a high on RSI though. So when looking at this, technically there's one bear div. There's a couple here. This would be your third real big bear div though, whenever a high is put in, unless it can push past at least this high back here from the 10th of November. And in this case, in order to do that, it would have to push up to this yellow line, somewhere around the 85 read of RSI. And in that case, that would put it at 46, 451 would be the user alert high here. So, it's not out of the question, to be quite honest. It would have to, start recovering above this monthly back here. It would have to recover this monthly, I should say, at 45.5 and then start pushing towards the next monthly at 47K. That would keep it out of, it would keep it relatively clean from a bear div perspective. But, it's getting close. But we are not there yet in terms of what I would want to see for, maybe a little bit longer form pullback. This still has some legs is what I'm really trying to say here. 43.8 is going to be the momentum pivot on the daily. It is looking pretty good here still. The 2-day, which is closing with today's candle, is pivoted at $43,000. Very nice. This is fresh expansion too, as I noted in our last stream, and there is no bearish divergence in this trend on the 2-day. So this is powerful. This is just pointing to continuation from the 2-day chart. So keep that in mind. Let's go ahead and, BBWP is 75 over 45. This move is going to stay um, on its highs, I believe, for a little while. It might get volatile in the daily or in lower term timeframes, but this is from the 2 day perspective still ripping. We might get some, like I said, we might get some pullbacks in timeframes lower than the 2 day here, but it's likely to keep pushing on. We can see that the levels are pretty clear on the 2 day as well. The upper second standard deviation is right there at the weekly at 41.8 to 42K. The upper first is above the breakout area over here, and it's sitting at 39.5. So it's even above the weekly just below. And just for reference, when I'm talking about that upper second on the 2 day is right here at this weekly at 41.8 to 42K, and it's likely going to be oscillating in and around these two weeklies here, where this weekly above it is at that 43.2. And then we've got the upper first on the 2 days right here at this weekly at 39K. So, this is kind of just getting rolling in terms of expansion. At minimum, I'd be wanting to see this, looking for maybe a longer form consolidation or a wider pullback. I would want to see it below the upper second standard deviation. Now, granted, that is going to tick up in this next closure. So this is probably going to be somewhere around, the 43.2, maybe even 43.5 area at the upper second there, because this is aggressive expansion on BBWP. And when looking at, where things are, it's quite far away from the moving average as well. That does mean if there was a sharp move to the downside, it's likely going to get picked up. That, like a spike back down to the basis or something like that, or, even down to the upper first, or a massive dump off down to the lower first here, which, by the way, would be right into this 34,750 weekly. That now this is a daily, but this was the low on the weekly there, right into support here. That was all the way back here. That was this guy right here into the weekly 34,758, nearly to the penny. So we're getting tons of confluences that even if whales just started dumping left and right, taking and sucking a bunch of liquidity out of the market, nuking derivatives and all that kind of stuff, I would still be looking at worse. This coming back to this sideways and up consolidation somewhere around the median there at the lower first. That's what BBWP is telling me right now. This is basically telling me that pressure is up right now, and if we were to even see a sharp move to the downside, it's more than likely going to get picked up. When looking at the 3 day, you're going to see the same thing, but it is yet to be confirmed. So that is where we do kind of have to exercise a little bit of caution, but I do expect this signal to follow through. We are seeing things pretty overheated on the 3 day at 44,380 for the momentum pivot, but Bitcoin's trading right above there right now. I do believe, even being anywhere above $40,000 here at the upper first on the 3 day is going to be perfectly fine. And then you can see even mean reversion back to the basis in a sharp move from where Bitcoin is trading now, meaning like kind of worst case scenario for bulls in this case, would be right back to the monthly at 35.5 there. Now, granted, the monthly is at 35,000 and $60, but it would even be above the monthly at that point. So that is again, kind of pointing all to the same area. Even if we were to see a sharp move back to the downside, some kind of bear dance party scenario, then, at worst, I'd be looking to the prior range lows or somewhere around there. If that broke down, then we're talking some pretty major downside from there. And, this is a big move up. So we're on log scale. This was the real low back here at 26,500 or so. And as long as it's above the upper first on the 3 day, looking good. And that's at 40K now. So, if it did dip below there, as long as it's closing back above there, it's going to preserve this nice expansive posture. We have the lower first, and now the lower second is almost to the higher low back here at 26.5. I do expect that to tick up over it pretty soon here, and close over close. We'll most likely I'll probably have a live stream just a little later on Friday, but we'll most likely see the basis even around the top side here pretty soon in the next close or two, as long as Bitcoin is above that upper first. So looks good. I do think if we see this close above the upper first, next close will confirm the moving average on BBWP as well. So it's going to look pretty good for continued tests to the upside, which is probably going to fulfill some of those deeper targets. Even if it takes a break after that, I think it actually should. That would be nice, a nice healthy break, consolidate for a little bit, get more people into the markets, that kind of stuff. If it just keeps going, we're likely to see much further upside, but much sharper moves to the downside. And we'll discuss that when we eventually do see that. We do have a very nice daily parabola structure. At minimum, I want to see some consolidation though. On the 4-day, we can see the upper second standard deviation is being pushed, and we can see that this is in a cool down period on BBWP. And the momentum pivot is at 42.8. So, it's kind of in between those two weeklies, 41.8 to 43.2. And in this case, the 4-day upper first is down there at 38,200. So, it's coming in the top side of the closes here at the upper first. It would not be out of the question to go see those areas tested to the downside if it did pull back. This, of course, is going to close with today's 2-day candle, and we are going to see residual expansion. This is going to continue to get expansion to the upside in this case, and maybe even slightly tick volatility up. As you can see, it is threatening to close rather above the upper second standard deviation at 43,400. If it does do that, we will see a move up in volatility, but we're not going to see outright volatility expansion from price here. We're more than likely going to be looking at a consolidation, around the highs again, just like what we saw back here, mainly because the basis is going to begin to move up to price action quicker and quicker. And it's currently at that $33,000. We're likely going to see it around the lows here at, $34,500 to $35,000 or so pretty soon. We'll take a look at that, of course, and follow up on Friday. But this is going to be an interesting one to watch. Yes, it is overbought. I expect bullish resets on most of these momentum oscillators that you see over time. 5 days going to be closing today. This is another big one. This one is confirmed upside expansion. Still, it is ever so slight in terms of the moving average here, but it is to the upside. To get it really re-expanded, I want to see both of these kind of move up in tandem, and I want to see that 5-day get some further continuation. We should see, a nice uptick in volatility if it can close today above the upper second here, and that's actually at 42,300 or so. So that would actually, where Bitcoin's trading right now at, roughly 44. It would have to dump out pretty hard. The latter part of the session, the New York session today, to really reach that target to the downside. Not saying it can't happen, but in this case, volatility expansion on the 5-day is what I would be looking for, especially with the moving average ever so slightly turned up on BBWP. I want to see that kind of follow through with it. Granted, the momentum pivot's very close as well at 43,600 to 700 area. And the upper first is down here at 36,800, almost $37,000 actually. Now, if If we do see a pullback to that area, you can see that the upper first is right around the 5-day highs here. And there's a close open high here, as well as a close prior to breaking the local highs there at that 38.5. So that big monthly area. So we do need to be aware that these are big areas to pay attention to. If they do start to get retested, that's not inherently bearish. Just coming down to find if there's more demand there, basically. Now, if the upper first is lost, you can see that the 5-day basis is currently at 31.5. I expect this to be above the prior double swing high breakout area pretty soon. It's only got one more area to go, and that would be the wick high here at that 31.8. And that, of course, is the ever important. This was really what kicked things off, and I had mentioned this. You can see that it was just up and to the right ever since this daily, weekly, monthly level broke. And that was the breakdown close that really solidified that the bear market was going to get pretty deep in terms of its correction. It wasn't going to be a shallow correction. So, that area broke, and it's been sideways and up ever since. When that broke down, that was the Luna crash. I believe somewhere around the Terra Luna event is when that 31.8 was breached on a close open, basically, that breached the bull market lows, basically, and sent things down substantially. The weekly, just to follow up here, is still in a very expansive posture. When looking at the BBWP and moving average, they might get closer to convergence here soon, but this is still confirmed expansion at minimum until we see closes back below the upper first. And I don't think we're going to see that this week, possibly not even next week, but we see that this is now at 36,500 to 36,600. It's getting very close to being above the weekly close opens here. Now, there is no swing, so you're not going to see me mark this area on the charts as an area of interest, but these close opens are something that you might want to mark on your chart at around that 37 to 38.5 area if you don't already have it marked. But the top side of these candle closes is kind of where I would be looking on pullbacks, and we're likely to see the upper first there as well pretty soon here. If that area is lost, though, I would be targeting the basis, which is at around 31,150, and I expect this to increase in its angle to the upside here and be somewhere around the closing highs here. We have it above the close opens, the 30,300 weekly here, the 30,600 weekly here. I expect it to be somewhere around this 31.8 wick high and higher. That's what I would be looking for. And then, that's a nice buffer zone, and it would be a logical retest on mean reversion if the weekly were to begin pulling back from here, putting in a high, and then coming down to test support. Right now, there is no call to be made. It's sideways and up until we at minimum see a high put in on the daily. And a high put in on the daily needs to then become a high put in on the 2-day, 3-day, 4-day, 5-day, weekly. And then we can be more interested in what the potential downside areas of interest are. When calling out downside areas of interest right now, it would be, if this candle reverses right from here and dumps off, or, next week dumps off, or tomorrow dumps off, or there's a quick spike down on a wick, maybe an exchange fails and something happens that gets picked up really quick. You never know. So I do want to make sure that you all understand that part of what we're looking at when we're taking a look at this stuff. 43,430 to 43,500 is going to be the big area to watch on the weekly as well. That pivot's going to come up quite substantially. It's going to start chasing price pretty close here. And of course, that is going to be, closes above on the daily this weekly here at 43.2, likely going to lead to Bitcoin, kind of playing within this area at 45.5 to the upside and 43.2 to the downside. Of course, if that breaks, it's below the lower second. We're likely to see this weekly here, and we're likely to see the upper first start to converge into this weekly up here at 41.8 to 42. Then we have a range between the bottom side here to, top side area being the highs, of course, to the monthly, which is overhead resistance at 45.5. If it does break out above there, then we're playing in the 47K range to 45.5 range. If that breaks down, you just tick it down to wherever you see a high put in on the daily and then the weekly and so on and so forth. So right now it's just sideways and up. It's still expanding on the daily. It's at 94% over 79. It's not done yet. This has legs still. I just want everyone to understand that. Move still looks good. Even a day or two of consolidation sideways, no issues there. And then even then, if we start to see mean reversion on BBWP, meaning that mean reversion is in play, well, because of the extended move, even if it's just going sideways, mean reversion is the basis coming up to price, forming a nice base on a consolidation. And then you're looking for a re-expansion, just like what we saw here. So be aware of those scenarios. And then if we do get true mean reversion, you'll see the upper second close below, upper first close below, and then the basis start to get tagged. So price converging on the moving average as the moving average is coming up is the best kind of mean reversion that you want to see. Those are the cleanest ones. And then you get nice momentum resets with those as well. And then you can, you look for then the upper first, upper second to break again for expansion. Or drops the basis and then starts to get expansion to below lower second, back here, lower first, lower second. We didn't see that. And from here, this is all in a position to catch price as it is. So keep that in mind. And I think that's probably going to do it. Let's look at the 12-hour actually. Let's look at some lower term time frame stuff here. 12-hour could have turned down. Yeah. It already is turned down. 44,300 or so is the pivot there. That gives us the upper first here at around, guess where, 42K, right there at the weekly area at 41.8 to 42K. Very, very logical area to come get hit. There's an order block here as well, right in that zone. So, something to pay attention to should we see, price head this way, right around that upper first. If it is dropped, the real base of support is going to be the swing highs of the previous move. It doesn't mean it's going to hit it though. Basis on mean reversion is right around the breakout area still right now, and that's at 39,500. I would still call the weekly at 39K. As close over close, we're likely to see the 12-hour show us the way before the daily here. We can go down to something like a 4-hour. We can see that it's just going sideways, and that is what we want to see. Sideways above the upper first. We're seeing it trend on that upper first. This is indicative of a very, very strong move when you see this. So, when you see, yeah, I mean, it came down to support areas at the lower second, bounced right back to the upper second, upper third area, held the basis, and then hopped on the upper first and just rolled on to the upside. So what I would be looking for here is if we start to see that upper first lost, or when we start to see it lost, where is the basis? Where is the lower first? So in this case, for the 4-hour, if the lower first is then above these two lows here, that would actually be a pretty bullish sign if it comes down to tap on it. I would check where momentum is. You don't want to see it. You don't want to see it like hanging out underneath the basis band, because if it starts consolidating there, then it would be, in and around a low and possibly below it. If it is above it, then it's more interesting. So from where it currently stands, from where the current Bollinger Band picture stands at the moment, the lower first is currently below the prior two lows here, and I would not want to see it get there. So you want to see the basis hold somewhere around that 42K area on the 4-hour for now. And, this is all hypothetical. It's still above the upper first as it stands at 43.5. Thus making the upper second standard deviation an area of interest, which is right back at the highs at $45,000 there. So keep that in mind. And it could even push higher to the monthly at 45.5 if it does spike up there. And we can get an early indication of what the 4-hour is likely to do based on hourly expansion. So if we look at the compression here, very, very nice compression. Well, what happened the last time that we saw this? Not quite as clean on the expansion over here. It was because it was just sideways and up for so long. And it didn't quite go into as tight of a compression. But, the spike up and then consolidation, tapped on the lower second, third area, and it held the prior low. So there was no real danger of this looking like it was going to break because it didn't even close below the lower second standard deviation, initiating continuation, which would have targeted this next low down here. In this case, it started to get expansion targeting this high here, and then it rejected from it once, pushed on through in the next candle, move up. So that expansion right there was, it was the bands told you what was going to happen on this hourly expansion. That influenced the 4-hour expansion, which got a nice bullish reset, and things headed up there as well. Actually, you know what? I believe if we go back and we look at this particular candle for when expansion was kicked off, initially back here at, on the 5th at 6 a.m. my time. Once we saw this closed above, not only did it close above the highs, but it got expansion indicating it was going to test the next area of resistance overhead at the next wick high, which is at 42,400 or so to 42.5. It tested it in the next candle, swung it. There was a lot of people that went short here because it swung this high on like the 5 and 15 minute chart. And they got absolutely nuked to the upside because it's all very short-term price. And we're looking at expansion on the hourly as it related to those areas, a little 3-candle high there, and everybody goes short and get their faces blown out their booty holes, or their booty holes blown out their face holes, whichever way you want to, take that one. Well, they got taken out once, re-entered on this wick as well, by the way, on this move up. So this was a clean hourly candle up at 6 a.m. my time. And then the next move, they repositioned as many were trying to position off the low down here. Once expansion, we got 2 candles above the upper second, thus confirming expansion. Third candle takes out the highs, indicating we're going to go test those deeper targets that we had already talked about, above 42,000 at that 43.2, and then, above there, 45.5, which I still believe is very viable, as you can tell, as a target to the upside. Now, in this case, we're seeing a nice compression here on the hourly, and this is going to give us the bias, and we can check momentum in terms of the pivot. I'm not as concerned about where it is. It's in the bullish control zone still. It's probably going to go neutral on any closes below $44,000 at this point. But if price just continues to consolidate between, the bands here, or basically consolidate within this wider range, and the bands are tightened within the range, so it's pretty easy to see that if we close below the lower second, or not we, but Bitcoin in this case, at 43,600, we're likely going to go test the lows of the range, this wick low, which is right at this close open on the hourly, and that was at 43.4, right? So not too far away from where price is. It's a 43,369, nice on the wick. So somewhere around that area, if we start to see 43.6, we're looking for the next candle at minimum on any close below the lower second to be testing this area if it didn't already. If it already tested and closed below this area, then we're looking for expansion to the next big area of interest. And in this case, I would only be looking to, the local stuff. And that would be, the next close open at 42, 700, 800 area. It's right at that weekly though, at that 43, 200. So I would generally be looking for the weekly to get tested at 43.2. So that would be where you start looking at higher time frame stuff, right? There's a weekly just below at 43.2. So that'd be the next hourly area that I would look if I saw the lower second begin to get closed below and the wick low at 43.6 taken out. Now, below there, that's when we start looking down to, the close open here at 42.7. But then it's really back to the swings here at 42,500 to the close opens here around, guess what? $42,000 right there at that 41.8 to 42K weekly. So it's all lining up with areas of confluence. That would be a nice area to retest. I think that would be a bit of a gift for the Bears and the Bulls at this point, though. If we start seeing closes above the upper second standard deviation, however, that's going to bring into play these local wick highs at 44, 289, 44.3 right at this close open. Above there, and it's the wick high at 45 to the monthly overhead, which is the main overhead resistance at 45.5. Of course, above there, 47.1. I just call it 47. It's going to be, roughly target hit if it gets up around 47K anyway. And then above there, the bear market lower high at 48,240. All right. I went a little detailed there on lower term timeframes. I hope that helps you understand my thoughts on why or how this kind of all fits into the daily, not yet ready for mean reversion. Closes above the upper second at 43, looking for further upside, basically. So move is not over just yet. We'll check on it on Friday. And of course, I'll keep you updated in the Bitcoin in 60 seconds videos as well. And I am going to be calling out that upper second. Even if we see price get below it, in this close today, upper second's likely to be right on top of price. I would be looking for expansion past and then for Bitcoin to go and head up there. And it's likely that expansion past will be somewhere around 45.5, the 45.5 monthly to that 47K monthly. So those targets are still well and available, especially when looking at that 2-day. So just kind of to wrap up my thoughts on that, this is, from the band perspective, this is just looking beautiful on the 2-day. It's really, really nice expansion of the Bollinger Bands here. So and we're going to likely see a very strong close outside of the upper second here. If it starts to push above the upper third, a little bit of sideways on the dailies in relation to the 2-day is no big deal. I would say that if I was the one and only market maker of all markets, because that's what seems to be the freaking narrative all the time, I wouldn't give bulls a chance to enter lower, and I wouldn't give bears the chance for a pullback. So that's just me. If I was the market maker, man. The only one, because there's only one market maker, and his name's Steve, right? Steve the market maker. Fucking stupid shit that is, man. Literally, by the way, for those of you that don't understand why I make fun of that, is I literally help people study for this Series 24, which is a market maker exam. It's a liquidity provider exam for FINRA. So it's silly stuff. There's tons of market makers out there. It's all about who's got the biggest money and who's got the most on the line in terms of interest in something. If you see something like Bitcoin dumping off aggressively, it's because bigger players have interest in buying more. Not that there's something wrong with Bitcoin or it's going to go down forever or it's going to go to zero. And I say this while it's in this beautiful upside move, because you got to remember that there is going to be big, big, big downside moves in the markets here. And I want to note the open interest chart real quick here. And actually, we're not going to look at the hourly here. It's just been a markup on open interest, but we're going to look at the daily. So I do want you to understand context. And, context is everything. And when looking at the historical data for open interest, it is getting to some big, big areas. We've got open interest now back to the levels that it was on that lower high spike at 48.240, 48.5 area. So there's two things that should tell you. One, it's getting to an area of extremes in terms of open interest when looking at the chart here. But it's also getting to an area of interest, meaning that because of where open interest is, it is very likely that we're going to see that area of price get tagged as an equivalent, especially because market conditions are very different right now. People are not letting go of their Bitcoin like they were at 48.240 and 48.5. Their appetite is aggressive in terms of continuing accumulation. We're not in the same kind of financial conditions where we have a Luna with a stable peg algo stable in that case, that's getting absolutely nuked. We're not seeing that then followed up by liquidations across the board, right, from various large industry players in the game who are vastly over-leveraged. We're not seeing that same look. This is a very different look. So what we do want to see is, and I mentioned this prior when, because I was seeing even, people that I very much support and enjoy the watching what they're seeing in terms of what they're looking at in the charts, going, wow, open interest is really high. It's right at this level that price came down before and that kind of stuff. And it's like, well, for price to push on, we need to see open interest follow. We need to see open interest leg up along with price. And it's going to naturally, over time, open interest within the derivatives markets is going to continue higher, especially as the exchanges balances for Bitcoin go down, because there's that much less Bitcoin on the exchanges, so that it's equaled out by the leveraging up of the existing Bitcoin. So you're going to get those higher open interest reads over time. And over the years, you're going to see more and more open interest rises in terms of like a very long-term chart. Now, this is not going to be a very long-term chart because of when this is measuring it, when Coinalyze came out. But, Glassnode actually has good historical data on this. I'm not going to, I don't have Glassnode currently. What are we using over there? CryptoQuant. Yeah. And unfortunately, I can't show you the institutional side of the CryptoQuant accounts. But if you'd like, their data isn't going to be much longer. It's going to be starting around 2020 as well. But I believe do they have historical data for institutions? Yeah. Okay. So if you have an institutional account, I think I don't know, they're going to have to check, but I think they have historical data on there. I know Glassnode does for sure, but they're quite a bit more expensive actually. In this case, you want to see open interest leg up. It's an open interest breakout in this case. You want to see it then consolidating somewhere around the, somewhere in and above the $10 billion level, while price remains in a markup phase, basically holding its breakout level at 38.4, 38.5 area. And then open interest, you want to see somewhere around the 10.5 to 11 billion area hold, and or this is the other side of that. You see the highs hold at, doesn't matter how far Bitcoin comes down, but basically we see higher highs on price action that then holds those higher highs or higher low structure, and then we see open interest dump off and make lower lows. That would be the most preferable thing that you'd want to see. What you don't want to see is then that followed up by a lower high, because that typically means that a dump off is coming, meaning that there's less willingness to put positions on. So it's something that I may dive deeper into if you guys would like me to. We can always just follow up with this on Friday. I'd like your feedback on that, though. If you want to know how to really understand open interest, and then just go ahead and let me know in the chats or hit me up in messages publicly, please, publicly. I've got a very small following on X, but I'm just getting peppered with questions privately, and it auto filters that stuff. So I don't see it in most cases, unless I go explicitly click on your picture on my messages list, and it's already, we've already had previous conversations, and I seek that out. I'm not going to ever see your message. So what you should do if you want to talk to me publicly on X is just go ahead and tag me and say like, hey, you mentioned open interest on your stream here. Can you follow up with that? I'd like to learn more. Or you said something about Bollinger Band expansion. I'd like to know more. And I will follow up with that in the following live streams, so to try and answer those questions. So, all right. Excuse me. That was a lot of talking. Let me get a drink of water here. And then we're going to go jump into the Dixie chart. One more. All right. Let's go ahead and jump into Dixie here, as it did hit our upside target here at 409. And the next big area that we were looking for is, in terms of support and resistance, let's go ahead and do that. Actually, let's turn on support and resistance stuff that I should really group this chart, huh? But I'm lazy, so we're just going to do this instead and say like, okay, we were looking for 104 to 104.09, somewhere around this high on a close open. We saw the 104, kind of get swiped yesterday. And then today the close open below, and then it's pushing on to likely test this wick high here at around 104.21 above there. And I'm looking to 104.46 to 104.69. Nice. And that's the 2-day chart. I want to see the daily. Now, it did recover the basis. And the basis is where that 104 call was coming from. Now, if it does close above here, that makes the upper first area available as the next big target. And that's likely going to be somewhere around that 104.69. If it gets above there, we're looking at 105 to 105.25, 26 area. And above there, right back to 105.5 to somewhere around 106, I would expect at the upper second. Now, that would still be in lower high territory from the breakdown. So a retest of that area and a failure is what I'd be looking for if it got there, at least first pass. And then we look back and see if this is going to head down at all for a potential higher low. It is now threatening to put in a structure break in terms of closes, not wicks, but closes. So it's looking for a trend break on a close. If it can close today's candle above, it already closed yesterday's candle above. What am I talking about? So it already got its closing downtrend break. The next thing to look for would be that 104.21 break. That would be a downtrend break. And then the next logical thing to pay attention to on any pullbacks from any area would be higher lows, right? As it stands right now, it would have to run all the way back down and take out this low here at 102.46. Not out of the question, but more likely is on pullbacks, we're looking to somewhere around the lower first. Now, if you are taking this on a swing basis, we have the low, we have a swing high, we have a swing low, and then we have a swing high. So we already have trend, but on a closing basis, we do not have an uptrend just yet. We just have a trend break on a close, and we would prefer to see trend breaks on wicks to then go and look for that higher low. Doesn't mean that it can't pull back from here before it hits that wick high and then get some sort of a higher low on a close. But as it stands right now, looks good to keep continuing up. That is what is available to it right now if it closes above the basis today. 102.70 is the momentum pivot. This is all mean reversion, so revert back to the mean. If it does run the other way, we will see BBWP get up over, so meaning if it runs to the upper first or upper second of the daily Bollinger Bands, we will see BBWP get up over the moving average, and we wouldn't be looking for expansion to the upside in terms of price action and Bollinger Bands until we saw BBWP above the moving average and the moving average gets a positive slope as well. So in that case, it looks good. It's all mean reversion right now. It is all in bearish retest territory. There is no structure built just yet. It is simply an uptrend. There are some that will front run this and throw on a swing indicator and tell you, now even a swing indicator doesn't see this as a high to a higher low. It's still just one shot up. So my closing thesis was correct. And my swing thesis, according to the indicator, was incorrect. Technically, you have a higher high, the higher high wick, and then the lower low wick here. So you have higher high, higher low than the lowest low wick. That's the way that you'd be looking at that in terms of swings on lower term time frames. So if it comes back and it takes out that lower first, basically at 103.08, then I would be looking right back to the lows, to possibly the lower second at 102.21, or that support down there at 102. But in this case, its potential is more angled to the upside still from the daily perspective. From the weekly, as we head into Friday, we'll take a look at the weekly again. 105.89 is going to be what you want to watch, as that is going to start heading down aggressively. It's going to be more on the 2-week and higher time frames to keep pressure down on price, 106.43. But we start seeing closes back above there on Dixie, and it's going to show strength by turning these back up in the bullish control zones. Now the weekly would be in the bearish control zones still, but the higher time frames would be in bullish control zones. The 2-week here at 106.43. 3-week is still upside angled above 105.26. This is actually going to turn down in the next 3-week closure unless everything we're seeing right now becomes a deviation. And that's got 16 days and 5 hours to nullify a possible cross to the downside, meaning that this would actually be a very bullish signal for Dixie if it did get back above 105.26 and then close above there. Doesn't mean it's going to. 4-week is headed up, though, above 175 cents here. And then the monthly is headed up above 101.40. So Dixie's in a bullish position overall. I know a lot is being made of this big drawdown, but again, from the weekly perspective, I want you to have perspective. And the reason why is because traditional markets are not yet euphoric, but they might hit some euphoria here. This is painting, like what we talked about on Monday, this is painting like it could be a reversal on the weekly to set a higher low. And a higher low on the Dixie weekly chart is going to start to siphon off a lot of those. It's going to make a lot of TradFi guys take profit, basically. It's getting close. It's getting close. Doesn't mean that it can't just hang out in a range like I talked about earlier this week, but it's getting very close. So something that you do need to pay attention to. This is where, if this does, put in a higher low, it's I'm going to go out on a limb here and say it's probably going to put in a higher low. Maybe not this week, but next week at 104.21. I would like to be wrong for the sake of a lot of the people that I know are overly bullish in this market. Not for myself, because I already know what I would do and what I'm going to do. But you know, the only way that I'd be looking for more downside is a higher low that pushes to higher, to the upper bands or the basis and rejects, and then gets back below the lower first. Right now, the target is going to be, from the weekly standpoint, the basis here at 104.57. It is sloped up as well. So, sorry, I got an itch. It is, it's looking like it wants to possibly make a lot of bulls very sad. That being said, let's go ahead and look at sad bulls. One of those sad bulls is Peter Schiff, because he literally started gloating right at the top about gold. And right as he was gloating and making fun of Bitcoin decided to take another leg up. But gold hit that high there at 21.46. I had mentioned that it was already looking like it was going to trade back down below I think I had mentioned this. Yeah, it was Monday. It was trading back down below the 2081 weekly there, all-time high and monthly area. And if it did start closing back below 2030 or $2,030 and lose anywhere around that upper first, then we look down to 2016. Below there, we look to the basis and these highs back here at around $2,000 to the basis here, which has moved up significantly to just under $2,000 at 1998. If it loses that, we're looking right back to like 1970 to the lower first, as a pit stop area around 1962, and then below there, this wick low at 1953. We can now see that the daily lower second is moving into position below that low wick there at 1928. So you do want to see this continue up. And preferably you want to see the lower first get in and around big support areas. So you want to see it in and around this 1970 to 1980 area. Right now, this is perfectly fine to see big wick like that, a little bit euphoric on this move up, and mean revert back to the basis is actually preferable, but you still want to see it above this 1965 wick low over here to around 1977, 1980 right now. So this is going to move because the invalidation has changed a bit. And it comes in line with this lower first as well. So, and if it does trade back above the upper first at 2034.90, 2035, upper second still in play up there at $2,069. Always with the meme numbers. Always, always, always. Right? It's never ending memes. Yeah. So that is what I would be looking for here. If it gets really nasty, you're going to see it back down around 1950, 1930. And then to the upsides, basically run the highs again, maybe even in and around that wick. In terms of momentum pivots 21.40, so it's at the high. I think 2-day is pretty hot too. Yeah, 21.114. 3-day is $2,064. 4-day we're looking at 2,080. 5-day is 2,125, and then the weekly is going to be up there now, 2,125. Yeah. So gold is likely to cool down a little bit here. but we see that downside areas of interest even on the weekly are 1950. So let's go ahead and look at traditional markets real quick here. We've got Dow looking, to be fair, could be building a top, but it could also be continuing because that's kind of what Dow has been doing lately. As long as it's above the upper first here, currently coming in at 35,888. As long as it's above there, and this close, I would say this open right here, as long as it's above 36,000, it's looking strong, like it's going to keep testing around its current high and higher, possibly up to 36, 570 to 600, maybe further. But if it does start painting a high, big area of interest is going to be this close open right here. We can go over where this wick here, this doji wick came in as well around the highs at 35,680 to the 35,600 area, possibly back to the basis there at 35,200 to this low at 35,000 where these two highs came in. So these are going to be the big ones. I do think, if it does put in a high, I think it eventually works its way down to retest 35 on Dow. Again, this is Dow for those of you that are just joining. We did Bitcoin earlier. You can always scrub back. And I spent a lot of time on Bitcoin today. If that area was to break down, I'd look to the lower first, which is now above the gap fill area at 34,581 to the gap fill area here at somewhere around 34,200. Possibly in and around these highs at 34,150. Below there, then it's looking for the lower second, which is now nearly above this last higher low area off the lows at around 33,835. That would be a massive move to the downside, and every bear would be calling for very, very, very deep targets to the downside, and quite honestly, it'd probably bounce very aggressively from there. Doesn't mean that it would make higher highs, but it would probably bounce very aggressively if we see it get there. Now, that being said, context is everything. Daily is way up there. Weekly is still, going strong. 33,730. Weekly still pointed up. Oh, hey, what about that 2 week? Oh, yeah, that's right. 2 weeks still pointed up. So we can't ignore these higher term timeframes. What we're looking for is areas of interest to the downside from the lower term timeframes relative to the higher term timeframes. And as it stands right now, it's still expansion or remains a high volatility environment. This is on the moves up. It's been consolidating, right? It's price consolidation between the upper first and upper second. That's why you see BBWP ticking down on the move up. But it does mean that when this does reverse, it's probably going to head into a daily downtrend for a while. And so far, we're not seeing that just yet. This could be the early stages of it. We already have it here on, we have a trend break, and, anything lower than this high up here at 16,000 basically at the highs there on NASDAQ, and it would start to confirm a downtrend. Right now, this is just consolidation. If it does want to come down and test the lower first at around 15,576 to around 15,500 at the gap fill, no big deal. Lower second is above this prior low here, off of the lows prior to breaking out of this downtrend, and an aggressive downtrend at that at the time. Lower second being above there on the daily is not bearish at all. You want to see that. Although, if this does break down, then we look to that low somewhere around 100 to 200. If it was to break down from there, then we're looking for quite a bit of expansion, quite a bit further down. In this case, this is no biggie. I would like to see this consolidate if it's going to push up further on NASDAQ. It's already headed down. 16,092 is going to be the momentum pivot, so it's right at the highs. But we're already seeing the etchings of this going into consolidation. As you can see here with BBWP hitting a rock bottom here on the daily, we see compression of the Bollinger Bands, closes below the lower first, basically lose this gap. Then we look to that lower second, right? So lower first is at that 15,576. Go fill the gap. Go tap on that lower second is basically what I'd be looking for. Of course, it would be a little bit bearish based on the daily. Here being below the basis band, as long as it's above, it's still in bull territory. If it does breach the upper first at around 16,046, we're likely to even see that momentum pivot turn right at the highs as well. And then we're looking for that upper second somewhere around 30. We're not looking at Dow or Bitcoin anymore. We are looking at NASDAQ, and it would be 16,300 or so. 200 to 300. All right. So, and again, checking on the weekly, we're not going to go deep on the weekly here, but remaining above that upper first. Good news for the bulls. We'd be looking for this to keep grinding sideways and up. Maybe wider pullbacks hit that basis band, which is right at support that we just talked about. We can move this here. And, you know, as long as it's above the upper first, it keeps that upper second as a target at 16,200, just like what I was talking about on the daily. Between 16,200 to 300 is generally where I'd be looking. The weekly is still going to be pivoted to the upside here above 14,945, so about 15,000. That's, you know, going to start ticking up aggressively. 2 week is, you know, turned to the upside on momentum as well. So looks good. SPY's going to generally be doing the same thing. A little bit different look here on the chart. You know, could it be painting a high here? Maybe. It's more of a consolidation right now. We're seeing it go more sideways than anything else at the highs. And then, of course, the prior support there at 453 has only been tested once. So this is a consolidation. We see the bands moving up, standard deviations moving up aggressively to price. If it does get back above the upper first, somewhere around 457 to 459 at the highs here, I would look for that 465 target that we've talked about, which is also the weekly target, I believe. If it does drop this wick low at 453, I would look to 450, somewhere around this high here, where the basis band is coming in. If that is lost, I would look for a gap fill somewhere around that lower first at 440 to that 446 area. And then below there, we look for, 440 would be almost to that lower second, actually, and likely going to be where the lower second's going to come in after close today. So that is going to be something to pay attention to on SPY, because that would be a nice gap fill, and then I would be looking for a bounce off the lower second initially, because it's at an area of interest. If it was going to push down any further, I would look for it to kind of, you know, it's right at the highs there. It's an area of interest right now at 436. So, you know, somewhere around 440 to 435, I'd be looking for a bounce. If that started to break down, then I'd be looking for expansion to the downside somewhere around 430. But right now, it's more angled to the upside. It's well above the basis currently, keeping its hopes alive for 465. 458 is a pivot. Close above the upper first, and we'd likely see momentum oscillate around the highs. 430, 427.20 to around 430 is going to be the pivot for the weekly here. And again, that upper second standard deviation on the weekly is at 465. And as long as it's closing above 453 at that upper first on the weekly, that makes that target available. And it will remain available until we see the upper first dropped on a close. 2 week, just as a reminder, is pointed to the upside. 440 is the pivot, 438 to 440, I should say. So that is the basics of what I'm looking at across various markets today. And, you know, a few things to pay attention to on Bitcoin and other assets and indices heading into our next live stream, which would be Friday. And it is going to be later than normal. It's my son's birthday. We're going to take him to school and have a little birthday party with his classmates as well. For those that don't know, it might be new here, my son is disabled and requires 24-hour protective supervision. So we are with him basically all the time, and we've become very close with his class, as he has a lot of aids and special needs aids, and then as well as therapies and stuff at the school. So they would like to celebrate his birthday, and I plan on being there with them. So I will be doing a live stream a little bit later that day. I'm probably just going to have to notify you via Twitter. So pay attention to the @CryptoLandy page. I will have the I forgot what I was going to say. Anyway, yeah, the stream will be later. I'll let you know on Twitter or x.com, where you can find me @CryptoLandy, where I also post the Bitcoin in 60 seconds videos. And of course, here on YouTube, you should see the premiere or the start time come up in your feed if you will have notifications turned on. All right, let me go ahead and turn the tunes on while I look through the chats here. Give me just a moment. All right. Yeah, I think I answered most of the questions over there for you guys in the non-public chats, right? Yeah. No, I'm good. Yeah, I'm just a little tired today. That's all. Yeah, you could tell I sounded different. It's also the microphone. They did an update, and I had to lower the volume a little bit of the music. Yeah, sure. I had to basically throw it together at the last second with the microphone stuff. The update nuked all the profiles, so my voice probably sounds a little bit different from the microphone profile as well. It's not, I don't like it. It's on some auto setting right now that I have to go and dig through. It's not playing well with the mixer. Yeah, I might just roll it back and roll the firmware back, yeah, and then come back to it, yeah. But right now, I can tell, like, I've listened to it back, and it doesn't sound like my other profiles, which would be closer to my actual voice. Makes me sound a little bit like I'm sick. I have allergies, and I'm tired, but that probably isn't helping either. Yeah. Thank you for your concern, guys. Appreciate it. For those of you in the public chat, I see a lot of you in public chat right now. If you'd like to chat with me or chat with the other members of the community here, go ahead and subscribe to the channel if you're not already subscribed, and you can jump in the chat there. I only have that gated for chat because of spam bots. They're the same freaking bots that do the MEV stuff on Twitter. Yeah. All right, let's look here on the public chat. Hello, no name. Hello, Cheryl. Ivan. Hello. Bobby. Hello. And I see quite a few others. If you'd like to chat, come on in and chat. All right, Soul. I'll look at Soul. Okay. Cheryl says BTC not overextended yet. I think I answered that question, but I do think that from the daily perspective, it's not there yet. From volatility expansion, at least, and even then, it can still, when mean reversion is in play, it can still spike those highs, run those highs again. You're listening in the background when I joined. The first thing I heard was booty. What did you hear? What did I say? What did I say? When was I talking about booty? Yes, Steve. Bobby would like a deep dive on OI. Yep. You know the basics. As would Cheryl. Don asked me a question. I'll go check on it in a minute. Oh yeah. The bears getting their booty holes blown through their face holes, and or the other way around, their face holes blown out their booty holes, or they're bending over and kissing their booty holes goodbye. That's basically what they've been doing this entire rally. Is Don in the chats here? I mean, okay, so if it's USDT based, yeah, I don't have anything from him. But maybe it's in, what chats? Oh, DMs from, yeah. Okay, so he was messaging me somewhere else on X. I gotta go look for his username. Give me a second. So he's asking about fear and greed. You know, you can use the fear and greed and you can chart it, but I wouldn't worry about it that much. Just know that you can draw correlations between like the extreme reads. You know, an extreme read is going to be over 80 and below 20 for a fear and greed index. Do they generally correlate with tops and bottoms? Yeah. But you know, we do have to take into account other market dynamics as well. Now, if you want to take into account the USDT stuff, hi Don, how are you? I knew you were here somewhere. But you know, if you want to take into account like USDT dominance, no, it's on the lows, right? You can draw an inverse correlation with the crypto markets in general because they are generally traded against USDT. So it's still headed down below 5.89% and it's increasing in its intensity. So in general, we're likely to see you know, even if Bitcoin pauses, alts rally, and then Bitcoin maybe with another pop to the upside. Judging just by USDT, that's not the only thing that you should be looking at. That doesn't mean that it's going to have a direct correlation with whatever it is that you're looking at, right? So chart your own chart, but in terms of generalities, you know, it is looking as though USDT wants to continue down. On the daily, which, you know, lends just more confluence to what we were talking about, is the rally's not quite wrapped up from the daily perspective, even on Bitcoin. From the weekly perspective, 5.81% is the momentum pivot for USDT. It is around a major low in terms of market cap, but it means nothing. Means nothing until we see expansion below and a break. Now, if it does close below 5.73, which it's currently right on at the lower second, and then subsequently drops 5.63%, then we're going to look for continuation down, which means continuation up for prices across the crypto market, right? You know, it's still pressure down on the weekly. It's still going to be pressure down on the 2 week. It's still going to be pressure down on the 3 week. Still going to be pressure down on the 4-week for USDT. 7% is the number to beat there on the 4-week, and the monthly is going to be down below 7.2. The 2-month is going to be down below 7.7. The quarterly is going to be down below, basically 8%. When you look at a quarterly on USDT dominance, it's breaking down basically into supports, likely to head towards 4.65 to 4.5% here between these two highs around the basis. So that is not the be all end all though, but that is telling me that even when this pops up, it's going to just present a lot of opportunity, I believe. This is a nice heavy downtrend. If it does start closing back above 6.66%, go figure, then we're looking for more. But this is expansion to the downside. It's gotta recover above 6.2% basically to even go test the basis right now, and that would be recovering these lows. It's just lending confluence to what we're already seeing on some of the other charts. Only use it as a confluence indicator and pay attention to your own chart that you are charting for whatever it is that you are trading, because that's the only thing that matters. You have everything you need right there. But Don may not have heard my answer. I did actually respond to you, Don. I thought maybe you were already watching, but if you weren't, that's okay. But in terms of the fear and greed index, generally speaking, above 80%, you're doing you're doing analysis on fear and greed, which when you are doing that, above 80 is an extreme, below 20 is an extreme. So you're going to find all your correlations in those areas, and everything that you're seeing on your chart is likely just telling you the same thing, right? You're just getting that as a confluence for what you're already seeing. So it is good. I mean, it's interesting, but the fundamental side of things, and this is I'm not putting anybody down, because I know that there's tons of people I know that use fear and greed across markets, not just for crypto, as part of their analysis. And I just don't. It's no offense to anyone, I just don't, because I have everything I need in front of me in the charts. But but yeah, you're correct in what you're seeing, is what I'm trying to tell you. You're 100% correct. So what you are looking at is correct, and it is lending confluence likely to your analysis, how you're interpreting the charts, which is I believe much in the same way that I am, which is that this move isn't quite over yet from the daily perspective, and even when it is, it's not quite over yet from the longer term time frame perspective. Lest we follow up with the monthly. The monthly here, we're starting to see expansion on the monthly, and this is only the beginning. So if this closes anywhere above $40,000, $40,200 or so, we're kicking off expansion on the monthly. And I've never seen expansion to the upside or downside from a monthly perspective be nullified and run the other way immediately, right? Typically continues, tests higher, and then even in some cases puts in highs, and then just keeps marching on after retesting local supports. So this is only getting started. And when that quarterly turns, the quarterly is probably going to turn up, and the monthly will probably turn down around the same time, which means that your bias should be to be looking at the quarterly. That is, if Bitcoin doesn't just blow past this lower high at 48,240 and then run right for the all-time high. And even then, I would still be looking for substantial pullbacks, along the way. And when I say substantial, they can happen, very quickly within the monthly candles. I mean, we saw substantial pullbacks on the moves up here. I mean, big pullback in January of 2021, but it was still, close open higher, right? It did wick down into the prior monthly candle. When I say pullbacks, I do mean like they can happen quick. That's what I would be looking for. We could see 3 candle structures in and around like what Bitcoin's doing now. 3 candle structures in and around that second standard deviation, but we rarely see it. It's still, because this is not a closed monthly above the upper second, we rarely ever see that happen. Again, I will point you back to 2016, where we did see a 3 candle structure above the upper second here, but that was just opportunity. But yeah. All right, so I think Sol was really the only request. Let's go ahead and take a look at Sol. And on the monthly, this is looking good on the monthly. I haven't looked at the monthly in a while. Now weekly is, it's starting to get a little tired. You want to see it consolidate above around 50 bucks, 48.40 to 50 bucks, around that weekly upper first. So to keep its hopes alive of running to the upside resistance at 75 to 80 bucks or so. If it does drop, you could take the close. You could say 45 to 50, actually. Let me move that microphone back closer to me. Yeah, I would say the line in the sand for this particular move, in terms of consolidation with upside potential, I would want to see it somewhere around that 45 to 50 bucks as an area of interest to hold. Because if it loses it, it's likely to head to, back to 35 to 40 around this close open, and then possibly down into the 30s. And if it goes further than that, it's testing these lows and these highs over here at like 25 to 27 bucks again. So now above 80 bucks, we're looking at 90 to 95 and 100. These weeklies up here. Lower term time frames in terms of the daily. It's in a sideways consolidation. It's kind of doing what Bitcoin did, just so you know. And when Bitcoin rips, typically alts are the beneficiary after. Even if Bitcoin turns bearish later, you typically see a little pop in alts shortly after. And this is a nice daily consolidation. Looks very much like Bitcoin prior to the move up to the wick high at 45. So, I mean, if it closes above 65 bucks, it's going to run its local highs, which the wick high is coming in at 68. I'd be looking for 70 to 75 up here, possibly 75 to 80. Above there, then we're looking at 80 to 85. There is dailies up here. There is lows up here around that 85 region. And I know this by heart because I am trading it. So I have been trading it, I should say. I'm not in any current position. Well, actually, let me check. Oh no, I do have I have a smaller position still open on it, but I'm like way back here from the swing area down here. But it is, it's basically on my final take profit before looking for, reevaluating for longer term pullbacks. That is just the trade. I did pick up spot as well throughout the bear market. So, I'd be looking somewhere around 85 to that 93 resistance there. BNB. Yes, I know. It's the grand B&B exit scam people. To be fair, the daily got freaking nuked, got freaking rocked back here in late November. Of course, that's around the CZ news. It's actually holding up quite well, to be quite honest, all things considered. This could counterpoint to the going narrative for B&B. This could be setting up a triple bottom on the daily. I think I wouldn't actually be too interested in fading this right now. 224 is going to be the momentum pivot. It's not ready for anything yet. If it breaks out of this short-term consolidation off the lows and specifically regains this wick high to close open up here, so like the big zone would be this area here, basically 234 to 241. That being the upper first standard deviation basis to upper first. If it reclaims that area, bullishly retests this low, and then starts pushing up, it's going to push back to these highs. 250, 260, so on and so forth. What is it? 250 to 260 area. That wick high that it threw was at 275. If it gets above there, it's going on a march. Yeah, that was this low over here as well. Excuse me. Indigestion. You could hear that all the way over the microphone, couldn't you? Yeah. It'd be, that rejection came right at this low. Also, an order block over here. I'd be very careful with it. Above 275, then it's 300. Roughly 280 to 300. It starts marking up pretty quickly from there. 295 to the low 300s over here. If it takes out this consolidation right here, with the high coming in at 317. So basically, if it gets above 300, this thing's going to rip to the upside. To be fair, if it does drop 220, it's going to head back to these lows around 200. It's still never hit our really bearish scenario targets down here at 196 to 183. If it gets below there, that's where I'd be looking next. Weekly is probably going to... I'll be honest. I don't know who's looking for $50, but I mean, they're looking for $50 because if this big consolidation breaks down, I mean, the next big area of interest is like 40 to $50 over here. But man, the weekly could turn down at 260s to pivot. I'm not that concerned about it though. The only way I would be looking for further downside is if we start seeing the lows get close below, and it not bounce off the lower second at 200. If it starts closing below the weekly $200 range, on the weekly I should say, below the lower second, then I'm looking for expansion down into that 180 area, and then possibly below there is where it's danger. But right now, this could reverse very quickly. All it needs is a little bit of liquidity to pop this thing up above that 240, 250 range, and then it's right back trying to test these highs of this consolidation. And then if it breaks out, it's going to be running 300, 350, probably much further up over time. I mean, I'd like to see what the 2 week looks like. Yeah, the 2 weeks 208 is the pivot. This is coming off expansion to the downside, and the 2 week, equal highs, higher high. They're probably calling this out as a rejection, but it's above the lower first. at 215, you know, which means that it could still test down into that area, no problem. It's if that area breaks down and then the lows break down, you see where the lower second is there at 173. It's going to be quite a markdown, but you know, above 208 on the 2 week, it's looking fine. The 3 week's probably even getting ready to turn 209. What's the 4 week looking like? Above 223 on the 4 week. It's going to start turning back up. In the lower second, this is a consolidation on the longer term time frames. Above the lower second at 190 even. It's fine. About the monthly. Yeah, even the monthly's looking the same way. 243. That's going to change though at the end of this month. This thing could turn around and just you just go to my the link for Landy Bands is in the description of every video, and it's also in my main profile. So if you go to my profile on X or Twitter, it's right there. The link is right there. Yeah, I don't know about the whole nuke this thing to $50 again, to be quite honest. I think there's too many interested parties. But who knows? Bitcoin's on the 382 from wick to wick here. Gives above, if it gets above 44.2, that's going to be a nice expansion on the 15 minute, but see what that is in the hourly. Yep, that's the 50%. Look pretty good. Run the highs again at least. But yeah, if you wanna grab the Landy Bands, you can just go to my main page. They're highly customizable, so you're gonna see them look a little bit different. And here's the link as well. To my Twitter/X profile page. No worries. Bonds? Sure, we can look at bonds. I mentioned that it was a pretty extreme move to the downside for bonds. See, 104.21 is likely in the cards for Dixie here, which is going to kick off another leg if it does do that, at least on a wick basis at minimum. Yeah, 2 year bottoming into a consolidation. Momentum's up above 4.6%. So it's above the basis. It's likely going to run these wicks at around 461 to 462. If it gets above 462, it's going to run 465 pretty quickly. For the 2 year, yeah. 5 year, it's 2 moves down to the lower second after rejection at the upper second. Regain the lower first. We're looking at 4.15. If it gets above there, I'd be looking right back to the upper first, somewhere around 4.17 to above there, we're looking to, that 4.2 would be the highs. Above there, we're looking to the upper second, which is, I'm sorry, that would actually be 4.2 at the upper second. If it does start breaking out above there, we're looking to 4.22 to 4.5 up here. 10-year, same deal, well, it's got to get above 4.13 to get to 4.15 at the basis. If it can do that, that'd be recovering this area over here, and I'd look for it to auction up to around 4.2 to 4.25, 4.22, and then 4.25. So we're basically looking at the same thing, just with slight markdowns along the way. Yeah. 30 years much deeper. So you're looking at 4.25 to even regain the lower first from here. And then it'd be somewhere around 4.3 by the basis here and this wick. And then we're looking above there to the upper first around 4.32 to 4.33. And then, if it was just going to run the other way, it would be 4.35, 4.36. But I doubt that's what we're seeing happening. That's just from an hourly perspective. This is down quite heavy today. No one wants to hold long-term treasuries. They don't have faith in the treasury. So everything's shifted back to short-term. So they're failing to get what they want. Treasury's failing to get what they want on the 30 years. So. Yep. It's all short-term rollover debt. Yep. It's going to be, it's going to get rough in terms of treasury liquidity. If that's the case, they're just going to have to keep. They're going to have to keep pulling from institutions that are just going to keep going short-term, and then. Those institutions are being funded by the Fed anyway through, most of those institutions are actually bankers. They're banks. And then they're getting their liquidity from the Fed, which is getting it from the reverse repo. So once that's gone, then that whole thing collapses. And rates probably spiral down, not up. The reason why they would spiral down and not up, in my opinion, is because in order to spiral up, all those auctions would fail. They just wouldn't be able to borrow. So you'd have the opposite effect, which means that things are collapsing in terms of see a dollar collapse much further, which would actually run counter to some of the signals that we're getting on the longer term time frames for the dollar. So it would be a failure. You'd see lower highs that then took out the lows, and then come back to it later. But that would not look good. But you would see. The net effect of it would be a lot of dollars moving to stuff like, stocks, bonds, would not be the preferable thing to be in at that point. Would it be stocks, hard assets, your metals, and then cryptocurrencies? Why do you think all these players in the game want in on a Bitcoin ETF? Like, they know what the fuck's going on. Excuse my language, but they're not stupid. Why do you think the Larry Finks of the world flipped so quickly? Because they know. They're not dumb. They know that they need another ramp. They need another avenue. And it's not for them. It's not just for them. Their entire asset under management, their portfolios would collapse. Right? So why would they want themselves to collapse if they know that the escape route that they can offer is right here? Here's Bitcoin and other cryptocurrencies. Because once Bitcoin's got an ETF wrapper, you're going to see all kinds of shit. And you're probably going to see shit like Doge and all that stuff. And maybe that's where, Doge actually hits $1, but I don't think it's ever going more than that. That would make Elon very happy, wouldn't it? But yeah, what you really got to understand is the dynamics of what's happening in the macro economy versus what is happening in markets is that this is all in an effort to keep the most amount of liquid dollars or available liquid dollars right now without having to directly go into dollars, right? Because you can trade out these assets. You can do swaps of assets and indices. And the conversion will be marked down as dollar swaps, but what you're going to see is the escape route for that of which they would end up losing in assets under management is going to be Bitcoin. That's what the plan is. Like, if people can't see this, everyone knows, every macro expert that is looking at the economy and understands that the economy is garbage, understands the problem with the debt load on the Treasury, understands the problem that the Fed faces, also understands that when this thing blows up, they're all also going to be bag holders. It's not just the little guy. They're all going to be bag holders. So what kind of parachute do you have out of that? You got to have something. And the easiest way to do it right now is not to go in and start creating your own cryptos that compete with what's already out there. You take the biggest boy on the block and you say, I'm going to ETF wrapper this as a spot item so that I have access to the underlying asset. And you just start going full bore. I mean, how many ETFs are there? There's like 13. There's 10. There's more that have been filing. Yeah. They're just not on the docket yet. Yeah. So it's one of those things of like, they know what's up. Why, if ETH was the chosen, why did they all go Bitcoin first? Why? Because it's got the biggest market cap. Also, they also understand rather what Bitcoin is and how it works, and the fact that it is limited supply. So, yeah, it's gonna be very interesting times, because there's gonna be a massive shift in the world of fiat, and it's coming sooner than a lot of people think. But when I say that, we're also looking at monthlies, quarterlies, 6 months, and yearlies. So it's about on track with all your Bitcoin maxi targets. And the guys who were looking for Bitcoin to make lower lows were the same ones that were looking at the economic data, crowning themselves macro experts, and then saying that the entire markets, traditional markets, were going to collapse. Well, look, they said that at the lows. The market ripped, and it's near its all-time highs, right? Now, what does that mean? What did they miss? Well, they missed the fact that when things are going really bad, you have to have an escape route, and that escape route is, reinvestment into these companies with the available dollars that are out there. So you it gets funneled right back in. It might even make higher highs in traditional markets. It might even go on a bull run. But that doesn't mean that the economies of the world, especially here in the United States, aren't completely destroyed and untenable, because they are, especially for the everyday person. And this is only going to worsen as, even as the stock market rips and has been ripping to the upside, right? Then once those profits are locked, how much you want to bet? I'm going to call it now. We've already done the analysis. This is just me chatting portion. So we've already looked at all of it. So the thesis in my mind would be like, watch when markets really do collapse to the downside. and then watch that coincide with a Bitcoin ETF launch. And then when the sales pipeline is already being built, and it's already kind of built. I mean, there's already set plans to do specific things with, spot ETF shares of Bitcoin, iShares Trust, or whatever it might be. BlackRock is not the only one doing this. And you're going to have a massive appetite, and it's not just going to be the United States. You can buy these ETF products or these ETF wrappers for spot from anywhere in the world, right? So you're legitimizing it here in the United States, which is going to cross over into Europe and everywhere else, and you'll be allowed to, log into your brokers, and if your broker has the right licenses, you'll be able to trade, the United States stock market, which you can pretty much trade from anywhere in the world. Through a brokerage account, you'll be able to take options, you'll be able to redeem, you'll be able to do all that shit. And the amount of force that will be exerted upon the remaining spot Bitcoin holdings of every exchange around the world is going to be immense. And it's likely going to happen around the same time that you'll see rallies still in traditional markets, but you'll likely see this in a big unwind happen around the same time that we get a massive unwind in the traditional fiat systems. And what do they unwind to? Well, they're probably going to want to pair you to a CBDC, because if you're going to trade and get back into using anything or going to the store, they're going to try and get it to the point where it's like, okay, all this Bitcoin is basically locked up in these ETF wrappers and there's nothing to even redeem. And if you're redeeming it, it's going to cold storage. So they're going to put checks and balances in there. And in terms of checks, it's more going to be like, we're going to try and stop you from using it. So it's going to end up being a regulatory thing where it's, I'm not calling like straight up gold seizures of assets and stuff like that, like turn in your gold, but more of it limiting how you can use Bitcoin within the system, right? You want to go to the store, you want to go, shopping or something like that. Yes, there will always be other alternatives, but by and large, the majority of it is going to be kind of like pushing that out and then making you pair that to sell Bitcoin to the CBDC. And then the CBDC is then used to track and censor and so on and so forth, right? Like that is one of the reasons why you see this race to build these decentralized networks. It's why it is so imperative, because it is a race against time, because the biggest player on the block is the one with the infinite money printer, and they're slow to move, but when they get rolling in a direction, you're not gonna typically stop it, and they are faced with either collapse or roll into a new system, and that new system is CBDCs. But it's not a hoax, it's not a conspiracy theory, it's real, it's here already, and their plans for moving people in that direction are very, very clear as well. But they also are at odds with the same people that make this system go. So that's why you're seeing this kind of tit for tat, back and forth. So now it's becoming because it is at odds with even the people within their own system, the bigger players that even make their system go. Now it's a race to like, okay, this is like, we want to be the first to get there. That's why you see a lot of like, JP Morgan's head, was it today or yesterday or whatever it was? I don't remember. It's today probably. With Elizabeth Warren talking about like, Bitcoin is only used, the same old motto. It's only used with like drugs, trafficking, and illegal activities or some shit. Which the most widely used exchange medium for any of that stuff is US dollars, right? Like that's, and in fact, that kind of stuff on Bitcoin is at such a low level that it's almost negligible. even in equivalent dollar terms, it's like it pales in comparison to what drugs, trafficking, and other illegal activities or illicit activities are used for in dollar terms. It's like exponentially larger. But he brings it up. Why? Because they got shit going. They're gonna get into a Bitcoin spot ETF. Like, FUD it out in the open. Keep retail away from it. Keep retail away with what you say. And nice thing is people who are paying attention know better. And I've said this before. Yes, thank you for bringing this up. So Jimmy says, he was saying that basically what he's saying is he's talking about what we know is already happening right now and why Bitcoin's price is pumping the way it is. It is because the early investors into the spot Bitcoin ETFs, which means if you're an early investor, you're a seed round investor, you are funding all of the work that goes on to create the ETF, right? They're getting their fills in preparation. In return, they're getting their share back in fills at this point. And you've got all these different companies that have, applied for spot Bitcoin ETFs to the SEC, right? So they're waiting for now is just approval, and then the creation units will be created, right? Once they're approved, you're not going to create units prior to approval. You might. Yeah, that's why you get in you're basically you lock in your initial investment sizes from your seed round investors, whatever's left over from all the legal, all the other stuff, that goes on behind the scenes there. They get their fills and then they continue on. Take care, Cheryl. But they get their fills and then that is converted to the shares of the ETF once the creation units are created. And we have not even remotely seen that process occur yet. I know there's a lot of people like, no, they're doing the creation units right now. No, they're not. You're silly if you think they are. You're very silly if you think they are. That also shows like just the lack of understanding within even guys who are supposedly understand this stuff within the crypto space. They have no freaking clue what they're talking about. Even the guys who report on this, half of them don't even understand the underlying way of doing this stuff. They've only seen certain portions of the process, and in many cases haven't even been directly involved. There's a few that have. And then, but trust me, spot portfolio, ETF portfolio managers aren't on there giving away the goods on how it all works on Twitter. Okay, let's just put it that way. And the guys who do give you hints about it, it's because they've either been there during the process, assisted in the process, or are managing that process. So listen carefully to the people that actually understand how that stuff works. Once the creation unit process starts, you've already got in the seed round, which is getting some of that filled back, and then when the creation unit process starts, that will be lumped in, and generally in this case because it's spot, so you'll lump that seed round in to the initial creation units, but then you still have to gather money for the additional portion to get your fill size for that creation unit. Now it depends on the sizes, and a lot of that stuff is being worked out right now. In terms of the lot sizes of the creation and redemption units. So, and you do need a little bit ahead in some cases too, because if you're getting redemptions and you haven't fulfilled on the other side or have enough on the other side for the redemption process right then. I mean, in the way that this is likely going to work is they've got Coinbase custodial is going to be handling a lot of this, so that the AP is going to basically be just going directly to them for redemption. And it's easy to move. It's not like gold, right? How many of you have ever tried to redeem spot gold? Have you? Yeah. What a bitch that was, wasn't it? Yes. And the fees? Incredible. Yep. So, yeah, I mean, it's not, you know, and in some cases there like on gold, there's in some cases there is a size limit that must be met before you can redeem. Otherwise, you're just trading paper back. We might see that. Yeah, we might see that in Bitcoin. We don't know yet. Yeah, if they fractionalize it, yeah, like yeah, I agree. There might be a redemption threshold that must be met. Otherwise, the fees probably wouldn't outweigh you just going and buying spot yourself. Yep. That's how you limit redemptions from retail. Yeah. Set redemption at 1 Bitcoin and it's at 500,000. Yeah, good luck, right? In order to redeem your ETF, your spot ETF, you gotta and actually hold the underlying asset. You need to have 500,000 USDT equivalent, or USD equivalent, or CBDC equivalent, right? In order to get the Bitcoin out. Yep, I could see it. I could totally see it. Yeah, being a 1 Bitcoin as the redemption threshold. I could see it, man. I because then, you know, what do you do with like really small like sats, right? You just make it so that the redemption process fees would be, you know, it's not even worth it. Maybe even more than what you, yeah, maybe even more than what you actually have in terms of the asset value or the ETF value that you hold. Yep. That's going to be the kicker, because that's likely what you're going to see. Oh yeah. But that's okay. I mean, look, normies aren't going to care. Regular retail is not going to care. They're not going to care. Leave it to the innovators, you know, like City Council just approved another buy. Right? But they're approving this for future ETF shares, right? And they have, you know, they would have enough to redeem. Yeah. No, man. They bought the freaking low. Of course they bought the low. Who do you think's been talking to them? They had buys at 18, 17, 16. Yeah. Yeah. Yeah, no, they went duh, they went to you guys through OTC. Yeah. Duh. Yeah, it's not look, that this is the actual danger of an ETF. Is that it's a spot Bitcoin ETF. To lay it out very simply for those of you who are in the public chats, lay it out very simply, a spot Bitcoin ETF is going to be massive for price. It's going to be a massive, big deal for price. That doesn't mean that we're not going to see volatility to the downside. We will. But the reason why it's going to be detrimental to the way in which the Bitcoiners of the world want to see things is that they can do things to like set redemption limits, right? Like you can either set a redemption limit on how much you can redeem at a time. You can also set redemption limits in terms of the threshold must be met in order to redeem for the underlying asset. And these are seen as normal things in traditional finance, right? So, and in the traditional market world. So what you got to understand about that is that we are likely going to see that. So if you have, ETF shares that are broken up into fractions of a Bitcoin on the spot side of things, like if you have to have, 0.25, 0.5, or 0.75 or 1 Bitcoin in order to redeem, those are like your checkpoints. Those are your gates. That's gating it so that, you have a vast majority of retail then that is unable to redeem because it's just not cost effective to redeem it, right? It'd be more cost effective for them to actually sell the ETF shares and then go try to find spot Bitcoin somewhere else. But wait, there's not a lot of liquid spot Bitcoin. So who's going to freaking have it all available? Right? That's the thing. Yeah, because management fees and transfer fees and custodial fees and fees upon fees upon fees. What do you think they make their money on? Yes, I know you're a part of they are. They make their money. I know you're a part of they. Not there or they. They are. You're a part of they, I know. But the thing is that's where the money's made, is on the assets under management. And they can make, arbitrage on the side, between the creation and redemption process. Percentage fees. No one ever pays attention to them, even though, yeah, a 0.01 or a 0.04 here or there. Yeah, it makes a big difference, especially when things are going up. Yeah. But yeah, in summary, what's going on right now is the seed round investors are getting their fills prior to the creation units. Those fills will be part of the initial creation units when they are fully created, whatever the lot size is going to be. And then that's the kickstart to get the ETF rolling off the ground there. There's many of them going on right now, so that's why you're seeing a lot of spot being transferred into Coinbase. That, spots being transferred into Coinbase, you're seeing millions and millions and millions of dollars worth of Bitcoin transferred into Coinbase, and the price goes up. It's because it's being transferred to their custodian. Most likely, there's guys haven't figured out the wallets yet on chain, but they will. And what's happening from there is then that becomes, the pressure on upwards for price, because it's literally being taken out of the market. It's not being, it's being transferred to custodial holdings in preparation for the creation process. And when the creation unit process really starts, that's when they're approved, then they can start pulling from other areas of their portfolio that they've already allocated ahead of time to then go and finish the creation unit lot sizes. And that's going to put massive upward pressure on price. So, your Scaramucci's of the world are going to be sitting pretty as soon as the ETFs launch. They're already going to be arbed in on the other side too, but they're already going to be in that creation unit process right from the beginning. So when price moons off the bat from the subsequent lot size fills on those creation units, then that's where all of the pressure really gets put on price to the upside as supply just gets sucked off of the market in order to fulfill this. And you will see some redemptions right off the bat, but it's not gonna it's gonna pale in comparison to the creation side of things as money starts flowing in. A lot of money market guys, a lot of money managers, a lot of portfolio managers are already looking at like a 2% allocation. Yeah. Some are going a little more conservative at 1.5% and 1%, but 2% has been generally what I've been hearing. Yeah. I know people personally. I know people personally who are allocating at least 5% of initial investment of their total asset under management allocation. So Don't know who those crazy people would be. Yeah, cool. Great convo. Anybody else have any questions before I head out? It's been kind of, I got sidetracked because of the guys over here in the private chat kind of pushing me towards that direction. Any questions from public chat over here? Bobby says, interesting take. Interesting talk going on here. Sorry. Yeah, man. Look, things are very bright for the future of crypto in general, but in particular Bitcoin. Told you there's going to be a lot, and I'm warning you now, there's going to be a lot of dooming about the ETF launches. When details really start to hit public on what I just explained, people are going to tear their hair out. You'll have one side celebrating it. You'll have the other side just, really dooming about it and the implications. And you're going to hear a lot of stupid narratives surrounding it as well. This is how they're going to stop you from getting Bitcoin. Oh my God, they're going to keep you trapped in the fiat system forever. You're going to hear that all over the place. Okay, understand that is going to be the predominant narrative from many of the Bitcoin maxis. No, people are not ready for what's going to happen. There's going to be a lot of anger surrounding what is going to happen. And not even because people aren't in profits. One of the things you got to understand is let's say price of Bitcoin hits some of these crazy freaking targets that people have. Like quickly. Let's say, I'm not talking about over the next 10 years. I'm talking about in the next 2 years. Let's say 500,000 gets hit. There's some crazy targets out there like that. Maybe that's viable. Maybe. We don't know until we start seeing levels break and we get above the all-time high, and then we can make some projections. But, we can take some bigger picture projections and we can get those same targets, but I don't think they're realistic right now. But let's say 500,000 per coin in Bitcoin. Are you going to sell all your Bitcoin? You're almost trapped, right? So you will see a lot of people that are going to get themselves their minds really twisted by this, because it's not even the it could go up forever scenario either. But who's if you really believe in Bitcoin and it's just ripping to the upside, and you are in now the 1%, which, $1 million or so. Let's say on the conservative side, and you're 1% now. And let's say you're a whole coiner because you have one whole Bitcoin, and let's say it go, or two whole Bitcoin, and it goes to $500,000. Are you going to sell one of those Bitcoin and have your potential for it going up even more to, let's say $1 million, and then you would have 2 million instead of 1 million? So my point there is you're going to see the mental gymnastics that people are going to do is going to be nuts too. In addition to the oh my god, they're just going to wrap this in the ETF wrapper. You're not going to be able to get Bitcoin anywhere. The price is going to be so expensive. The network's going to be too costly. It's just going to become an unusable parked gold type asset. And that's what they're gonna talk about. That's what their narrative is gonna be. And on the other side, it's going to be the effort to pigeonhole it, and then to pigeonhole it as this store of value at that point, and then link its off ramps to CBDCs, and therefore you have a siphon from one side to the other. So that is where you're going to see a lot of hand wringing. And meanwhile, just remember what I've always told you guys. Bitcoin is the Trojan horse. It will become the measure of energy output of society. We're not just talking electrical grid and the manners in which energy is obtained or produced through the electrical grid. We're talking about energy output of a society, which is the total effort or energy expended by society to become society. Bitcoin will become the base layer, and it's the Trojan horse, and you must always remember that. And remember, mark the date that I keep telling you this. It was 2023 between these dates and these dates. Landy kept talking about that. Wonder why he was talking about that. Weird. Hi, Sam. Throw a like on the video, guys, if you like it. If you don't, throw a dislike. That helps too. At the moment, it doesn't matter to me, at least, so yeah. Chainlink? Yeah, I'll take a look at Chainlink, and then it's going to be sign-off time for me. For those of you that are just joining the stream now, you can scrub back. I have DVR enabled. And then, of course, after the stream ends, it'll just be if you're already still logged in, you can just scrub back as well still. Or you might have to reload the page to start from the beginning of the stream where I analyzed Bitcoin, gold, Dixie, traditional markets, stuff like that. Stinky Linky, is that what we're looking at? Yeah, let's go and look at Stinky Linky. Hey, look, it held the box that I drew. You know, it's gotta break out above the high here at 1662 to really get rolling, and that's right where the upper second standard deviation is. That would keep expansion going. Right now, this is showing like the convergence of I see what you did, Sam. Yes, Chainlink and Pepe. You can throw on another one there. All good, man. All good. I'll take a quick look at it. One thing I want to point out here is because we have volatility converging with the moving average, this would tell me that unless volatility gets under the moving average and moving average gets a negative slope, then I'd be looking for mean reversion back to the basis if it doesn't do it before then. And that's around 1470 or so. Below there, and I would look back to the lower first, around $14. And then below there, right into the yellow box here at this 1330 or so, I would say, by the lower second, to the wick low here at around 1285. If it does push up to and get above the highs here and gets expansion above the upper second on a close, that being 1662 specifically, I'd be targeting somewhere around, you know, there's probably going to be stops in between, but I'd be targeting at least a wick up into somewhere around 19 to 20 bucks over time. Yeah, it's getting a little hot to trot on the weekly. So as long as it's consolidating basically above 1285, sorry, 13 bucks. That's going to leave the possibilities open of it running the high to the upper second around 17 bucks to that $20 region, like 19 to 20 bucks. If it does lose, I would say it's 1955 with the overhead resistance, but I'd give it slush depending on your exchange, 19 to 20 bucks. And then if it does lose, though, this upper first at around that 1336, right there at our zone of interest, I would be looking to the close opens back here. If it loses that, we're looking over to we're probably looking at a bigger drawdown, like by a lot, you know, maybe 10 to 12 bucks, and then possibly even a dip below 10 bucks into somewhere around the basis. in the mid 9s. But if it does push on through, to be fair, there is actually one bit of there is this resistance directly overhead. So I will add one more upside target to be aware of, and that would be $18.07. So 18 to 20 bucks if it can expand to the upside on the daily here. And that'll happen on closures above 16.16 to go test 16.62. If it does that, then 18 to 20 bucks is the target. I already did gold, bud. Gold was, it went Bitcoin, Dixie, gold today. So if you scrub back during the stream and watch any of the Bitcoin stuff, it'll be right after Dixie. And I end Bitcoin. I spent some time on Bitcoin as well. Let's look at Pepe. Pepe looks good if it can hang out above the highs here at what's the close up there? $13.45, just fractions of a penny. And if it can remain, I mean, it's targeting a little bit higher at 1834 to 20,000 or 200,000, whatever the fractions of a penny that would be. It's targeting this high over here, basically around 18,1888. But that is only if it remains above the upper first, and that's at 133,148. Below there, looking back to the basis, somewhere around the base of this consolidation, which is at 1179.33, and below there would be right back to the lows at 1032.10. Now, that being said, it has upside potential still. This tells me the rally's continuing. It is not near over yet, so. I mean, we looked at Goldfinch earlier this week. I don't think my analysis would change that much. No, it hasn't. It has not changed from earlier this week. You know, it ran the highs already, so we got that target. If it does push up, I'd be looking for like somewhere around $2 to $2.10. Above there, I'd be looking for quite a substantial markup. Stops in between, somewhere around $3.35. If it does pull back, looking at it needs to remain above $1 to avoid falling to 75 to 78 cents, 75 to 80 cents, I should say. These two close opens here. And below there, you want to, it's basically back to like 50 cents, 40 to 50 cents, 47 to 58 cents at the basis. So yeah, it hasn't, that analysis hasn't changed too much, Sam. Same thing as earlier this week. I think it was earlier this week. Maybe it was last week. I don't know. Bobby says the customer comes in the store 3 minutes before close. All good, all good, all good. No worries, man. Yeah, I mean, above like $2, $2.10, then I would be looking for a markup if it can hold that area around $2 to $2.10. I'd be looking for a markup to $3 and then $3.35. The wicks, possibly even those wick highs again, you know, and that's all the way up at like $4.25. But when this thing gets rolling, it can roll for a while. I mean, $1 is the momentum pivot on the weekly, and the daily's showing, you know, no signs of really slowing down right now. Oh, this is Link. No, this is Goldfinch. What was I just looking at? Is it the weekly? Maybe it was Link that had the expansion that was still going. It's whatever I had just looked at. So scroll back in the timeline and the scrub back a little bit. Whatever one I was just looking at had tons of potential to the upside, and I think it was Link. No. Freaking hell, what did I look at so far? Pepe is the one that I was looking at. That still has the daily still in full-on expansion. It's Pepe, thank you. Private chat, let me know. Yeah, you guys in public chat are running like 30 seconds behind, maybe more. All right, that's going to do it for me today, guys. I hope you all have a wonderful morning, afternoon, and evening. Look forward to a Bitcoin in 60 seconds video later today after the close of the daily candle. I will update you on what I am seeing in terms of targets and what I am looking for. Friday, as a reminder, probably no Bitcoin in 60 seconds video. And the stream is going to be a little bit later because I am going to be with my son at his school. So you all take care. Have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And above all, please stay safe. That's the big one. You gotta, in order to trade safely, you have to stay safe. So with that being said, with all of that being said even, I'm going to put the timer on here. You can listen to some lo-fi synthwave tunes if you like. I do suggest for those of you coming in late that you go back and watch the beginning of the stream for the Bitcoin analysis, and you know, probably Dixie as well, and gold, because gold is looking probably for a little bit more of a pullback here. And with all of that said and me stalling to put the timer on, I'm going to let you go. So, Landy out.